Okay, welcome back to part 2 of this e-course. We identified in part 1 how to find the initial opportunities where we're looking for higher lows and lower highs that are 50% of the previous day's range, and also that aren't too big a range on themselves, so that way you're building up good pressure between buyers and sellers. In part 2, I want to examine the entry points and the exit points. The exit points either being the stop losses or the take profits. And again, as I said in the original part 1, these are very simple. There's no room for guessing, and it removes the emotion as such, which is fantastic, which is a great investment strategy. Now, we identified a number of these particular points. Here's one, here's another one, all through. What we'll do is we'll look at this, and what we've got here is a low of roughly 343.32 and a high of 345.21 or thereabouts. There we are, 21. You'd want to be exact when you're doing it, but this is just an example, so I can be near enough. So this is the range here, and that range works out to be $1.89 in terms of the range. So that's what we're looking for. What we do is we put an entry point to buy 1 point above the previous day's high, and a sell point at 1 point below the previous day's low. So our buy point is at 345.22, just up here, and our sell point is at 343.31. Now if it gaps on the next day, then that's fine, you don't chase it. It's only if it trades back within the range or starts off within the range and then runs through that we actually do the trade itself. In this instance, it started off within the range. We'd have a stop order to sell here and a stop order to buy here, and it's gone through our stop sell. So we've sold it at 343.31. We then put on, we maintain the original stop order on the buy here because that would close our position. So that now turns from an entry point to an exit point. And in terms of a new exit point, we then move 189, which is the previous day's range, below our entry point. So that's taking us down to 341.42. So 341.42, roughly about sort of here. And at this point, if you're a conservative trader, you would get out of the entire position and you would have made $1.89 on whatever your position size was that you entered as a short trade at 343.31. If you're a more aggressive trader, what you do with this strategy is you close 50% of your position. So you're locking in profits. You then move your stop that was up here at 345.22, you move that to where you got into your trade at 343.31. So effectively on that extra 50% you can't lose now. You would get out at break even on your stop loss, and you would then put a new take profit at 189 below this point here, which was at 341.42, so it's now 189 times 2 down here, which takes you down to 339.53, roughly about here. And at this point, you close 50% of your remaining 50%, so effectively 25% of your original portfolio size. You move your stop down to your level 1 here, which was at 341.42, and you move a new take profit to close the remaining 25% at 3 times the day's range from the entry point, which is down at 337.64 down here. And unfortunately, it never meets it. So we get stopped out at 1 point down here, or one level down. So again, a very profitable trade. You've now earned 3/4 of your position at 189 and 1/4 at 2 times 189. So a very, very profitable trade. That's generally pretty much the rules that you need to implement. So it's worthwhile just taking a quick look at how it would have performed at the various points that this would have happened. If we look at this one here, this is a bit of a tricky one because I can't tell whether this is exactly 50% or not. But if we assume that it is 50%, you're looking at what, 321.50 or thereabouts, and 320 for argument's sake down here, so 150 range. So if you were getting in at 321.50, because it would have traded here within the range, broken out through, 150 above it would have been what, 323. So did it actually meet 323? Yes, it did. So you would have made one full range. You would have got out of 50% of your position, or your entire position, depending on whether you're conservative or aggressive. And on the remaining 50%, you would have been stopped out at your original entry point. So again, a reasonably profitable trade. Not a huge one, but you know, profitable trade's a good one. We move through, we can't really see any ones. This one doesn't meet the 50% criteria. Move through. Here's one to get in. Again, you would have gapped on the open, would have come back into the range, you would have got into your position, and again moved up. Again moved up, you would have got at least one, maybe two times your day's range here. Moving through this one, again, very clear, opens up within the range, goes through your stop, and you would have got three times easily. Here we've already examined this one, and moving swiftly through on this one, again, you would have entered, and you would have been set two, maybe three times. This one doesn't meet the 50% criteria, and again, this range here is quite wide, so it would have made me nervous anyway. And moving through, doesn't meet the 50% criteria, a high, so it doesn't. And here's one here on today's range, so potentially there's one here to enter for tomorrow. Now the final rule, and I've jotted these all down on the page for you, so you've got it down at the bottom of the page, is that you close your position no matter what happens within 3 days. So in this instance, if we were here, you would have had 1, 2, and by the close of the third day, you're out. You don't run a position longer than that, and then you look for the next opportunity. So over 3 months here, you'll see that this opportunity cropped up sort of 6, 7 times, and every one of them I think has been profitable. So you know, this strategy is is worked out quite well on this particular stock. I did take a moment to grab another stock, which is Microsoft, and I thought I'd just have a look through here. So I'm actually running this through as I'm working on it. It doesn't meet the 50% criteria. Working through 50% criteria. Now here's one that may have meet the 50% criteria. What makes me nervous about this is the range. So again, I probably wouldn't have traded it. It's off the back of a very big day. It's a very big range here compared to its past. I'm actually looking for a range that's less than these sort of ranges, not bigger than this. So I probably wouldn't have traded it, and you would have got stopped out of this, or closed it after 3 days, because it would never have got back up. So you would have got in, sold, and would have gone back, but wouldn't have touched, and then you would have got out after 1, 2, 3 days. So wherever that sort of closed, so you would have made a slight loss. But again, you wouldn't have got into this trade because the range is just too wide. Doesn't meet the criteria. Doesn't meet. So Microsoft doesn't seem to have much. But again, when you're looking at a full range of stocks, you're bound to get some every day or every couple of days if you work through it. Here's one that probably does. Yep, this one would. Nice, small, tight range. Within the range of 50% of the day before, you would have entered, you would have gone short as it broke through, and again you would have got one, probably 2 times as it broke down. So again, very profitable trade, all out, in and out within 1 day on this, or at least out by the second day. So we work through, and that's it really on Microsoft. Only just the one, unfortunately, but again a profitable trade. So I hope you've enjoyed looking at this strategy. I've, as I said, jotted down all the rules on the page below the videos, and well, good luck in your trading, and hope it's very profitable. Thanks again for your time.